Good morning, it's Jonathan Barrett with this week's Market Buzz, and it's the 1st of June 2026. And as we can see, a lot happening there on the markets, and certainly a lot of volatility. I guess on the headlines, we'll do a quick run through the headlines, then we'll focus on the what we feel is the main game at the moment, particularly for silver, and we'll have a bigger, deeper dive into the silver market and why we think it's going to still be bullish. Then we'll look at basically what we're going to see in the market in terms of economic numbers, and then obviously go through the trades that we're currently open with. Okay, basically headlines. Stocks still at record highs, still, wondering why they're at these levels, but when you start to see through the numbers from the US, they're quite encouraging. There's not a lot of negative news coming out yet, but I expect that to continue as we progress on the week, particularly the cost of the war that's currently on and how that'll affect the US government's ability to fund itself. Obviously, US and Iran, they're kicking the can down the road. We've got another 60 days. Iran has actually said, well, that they don't want nuclear warheads. That's what the US wants. So perhaps something will come of that. And we'll just have to wait and see. But for all intensive purposes, that's put a top on the price of oil, and probably see oil price continue to remain relatively steady because the deal's not done yet. And we also know how Donald Trump reacts to these things. Okay, on the economic front in the US, Dell surged nearly 33%. That's obviously carried the market and helped carry the market to record highs. I guess it's the AI server business just boosted their earnings and boosted their latest guidance as well. And a lot of people are expecting that to continue. Although PEs are getting to that worried level of 30 to 40, we haven't seen any cracks yet. So I think that's something we've got to keep an eye on and close to, just in case we do get some cracks starting to develop. PEs are historically high, just so we're aware. Chicago PMI surged to 62.7 out on Friday from a 49.2. That's a complete turnaround. And that's also another supporting factor. Durable goods orders surged as well, 7.9% versus the 3.5% consensus that the market was actually looking at. Whether or not these numbers, are what they are, who knows? But basically, they're telling us that the US economy is weathering the war in Iran, and also the AI is delivering a good boost into production. And as a result of that, people are factoring in AI is good, must be good for profits down the line. Let's see what happens. And on the side of that, when we come to inflation too, the PCE monthly data came out and that came in below expectations. The year on year, 3.8%. Although that's still well above where the Fed wants the market to be, it's the market's quite happy to keep it on there. And the interesting thing here is the decisions that the Fed will have to start to make in terms of what it wants to do with interest rates. Are feeling really that AI seems to be carrying the whole lot, so I don't think we'll get too much peak out of the Fed, but I think everything will remain the same. We were actually thinking that we'll get one cut, but perhaps not. In Australia, we did get some inflation numbers last week. The RBI trimmed mean came in at 0.3 as expected. The year-on-year number came in 3.4 as expected. We were expecting a bit more of a push on that due to the costs of oil. That wasn't the case. So a little bit of a turnaround there, and a lot of economists are starting to revise their forecasts on the inflation side and what it actually means, what it will mean. We all thought that that it'll take time and prices remain elevated. That might not be the case. Anyway, let's see what happens on that side. Okay, as we said, we've sort of had some good numbers out of the States, and I think that's going to carry the markets. But now let's take a focus on silver, and I think it's good to focus occasionally on commodities that we feel there's a clear-cut reason to remain long. We have remained long silver and gold for some time, taking profits and also re-entering positions. And I think it's important now to focus on the silver market. We will also talk fundamentals and technicals, but there are 5 reasons why we think silver remains relatively well bid and why dips should be supported. In fact, we're happy to go along at these levels because we think there's further upside. Okay, I guess the main reason why we like silver is there's a frontier shift in terms of the demand for the metal, and that has to come down with AI and the electrification boom, which we're seeing currently. And I think when you look at it, there's a lot that needs to be done in the AI space. Data centers need to be built. Companies are investing hundreds of billions of dollars in this AI infrastructure. There's the demand for electrical components, semiconductors, high computer performance computers. Silver is used throughout these technologies due to its superior conductive properties. So if that boom's going to continue, which there's no reason why it shouldn't, then you'll probably see that silver will trade with it. And I think more so also when you look at that, just the renewable sector as well. It's used in the solar panels. So there's a lot of reasons why on that front, AI and the electrification, reasons why silver now will continue. Just as an idea, EV demand remains the largest direct source of silver demand, growth potentially doubling by 2030. As we're seeing just generally more people buying, particularly, but we've seen with the oil shock, people are saying, well, let's just go straight to EVs. Infrastructure, the same, it's one of the fastest growing segments. I think combined AI and EV could add 90 million ounces of annual silver demand by 2030. That's equivalent to nearly half the current solar sector consumption. So when you combine solar demand with this, then you've got a strong structural demand story for the commodity for some time to come. Reasons also is that we're in a structural deficit. Over time, the demand is certainly there. 70% of global silver production comes as a byproduct, so there's not out there mining by itself. So as a result of that, it's tied to the development of other metals. But what we do think, the inventories will continue to decline. We have been in a structural deficit for some years. I think that so far, 2022, we had a supply deficit of 272 million ounces. That deficit is still there. 2025, it has come back a little bit, but I think with what we've seen with the demand for EV cars, particularly from what China is producing, and remember, China is the number one importer of silver, we'll see that reverse and prices should go up again. In fact, that negative 95 million ounces perhaps is an expectation which I think will be revised over the coming months. Okay, the silver gold ratio, it's around that 60-70. At the moment, it's 60, probably expected to trade a little bit higher, but that ratio sort of will firm in favor of silver. And I think people will see that it's at the lower end, so therefore it makes sense. Okay, now look at the monetary environment. Just quickly, real rates are calculated by subtracting inflation from nominal. So that's going to be quite supportive. Central banks approaching the end of their tightening cycles. So whilst inflation remains above the long-term targets, we've got government global debt levels, they're continuing to rise. I think the cutting rates, inflation remains relatively elevated, but I think real yields could decline. And as a result of that, be supportive for precious metals. One final reason why we like silver, silver benefits from both industrial and investment demand across the board. So it's unlike most other commodities. So even if you see what the US dollar is, silver can quite happily trade by itself. Okay, righty ho. So that's all quite bullish for silver, buy on dip. We'll have a look at the technical side of it very soon, but generally we like silver. Now, over the next week, we've got a whole raft of economic data that's coming out. So that's a focus. US-Iran negotiations. That's pretty mainstream on the economic front. We've got US data releases. We've got the labour market conditions, non-farm payrolls, JOLTS, ADP employment. That's all in the middle of next week. That'll give us a clue what the economy is going and also how inflation might pan out. We've got PMIs, which will give us a fresh insight into the health of the US economy. China will release a whole lot of manufacturing data. And in Europe, we've got Eurozone inflation. And finally, in Australia, we've got GDP data. So there's quite a lot out there to keep an eye on. But let's have a look now at some of the trades. So I'll just share my screen. And yep, just share my screen. Okay, just having a little bit of a concern there. Sharing my screen. As you can see, we've got silver straight up, right out of the blocks. And let's just reduce that down there so we can see that chart. There we go. That's it. There's silver there. We like that on the hourly chart, the daily chart. When we do look at that daily chart, we sort of certainly see that there's a breach, nice little flat consolidation here, and eventually trade higher. A breach in that, get up to 90.40. Certainly got to break through that 79.15 level, and if that's the case, it looks quite good. Like these little movements down here. This sort of momentum's on the downside. A couple of positive days will really push it out to the top, and momentum indicators or momentum traders will start to go in. You can see that when we look also at that at the hourly chart. There we go. You can see that that's a good breach and a pullback, which I like. Okay, so when I see those sorts of signs, I get comfortable that we should be trading higher. Okay, that's the silver market. If you take a look at gold now, and gold, gold sort of just doing what it needs to do, which is good. A little bit of a lift, and that breach and pullback suggests to me that gold will also trade higher. I think gold will have a nice move to the top side pretty soon. Momentum indicators the same as with silver, so I don't mind that. Good little bounce off here at the lower end. That's there. Good little trend line there to break soon. If that breaks, then onwards and upwards. Let's move for that one. And as you can see, the hourly chart here, we've got to get through that 45.80. If we do that, then all pretty happy there. Good bounce off that low. Be guided by that low because that low there is important. If we do break that low, then the game's over for some time, but still quite comfortable on that. Okay, let's have a look at the ASX, not the ASX, the Dow, record highs, record high, record highs. Sorry, that's the S&P. Still at those levels. There's not much we can do. I do think there'll be a turnaround soon, but certainly not at the moment. So just keep your powder dry, I guess would be my feeling. The local market, and we are short there. Going sideways. I don't mind it actually trading within this range. I don't mind it sort of trading within sort of the 8,400 through to that 9,000 range because that will cement an important high. So I think still rallies will be sold into. And when you look at the hourly chart, it's pretty much the same there. Just trading sideways. Do expect it to go lower from here. Okay, so we mentioned that Aussie dollar, we know we're long. That's rabbiting around on the top side. I don't mind that. Whilst it stays here, then I think it will probably edge higher. And you can also see that on the daily, on the hourly chart, sorry. All looks good. Let's have a quick look at Brent. Lots of volatility, as we know. Very hard to do anything there, although sort of if you were technically minded, you'd probably have a bit of a stab at going long. But I think it's too much volatility in that space. Okay. Well, that's about it from me this week. I hope everyone does have a successful week's trading, and we'll certainly talk to you next week. Bye for now.